Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. A fourth bearish black crow on Friday as the market edged lower towards a congestion between 114.82 to 114.95, formed from the January and February 2022 highs respectively, and halting just above it. Overhead we have the 2019 high at 115.70, whilst further down we have the purple neckline extension to the August to September 2020 head and shoulders top, currently at 114.11. which, along with the congestion at 114.22, stopped the market's decline dead 3 weekends ago. Overall, we still have a move lower from the break below the dark blue late January to very early March descending wedge pattern. The primary target has been reached, and we're seeing once again to be making some moves down towards the much harder to reach secondary target X1 down in the 113.56 zone, though that still has a question mark over it. So far today, a slightly higher open, then a dip down to the base of the 114.82 to 114.95 congestion before a pullback, but not very far. Cable, aka sterling against the US dollar. A bearish closing black Mariposa on Friday and fourth bearish black crow. The market opened on the slowly rising purple neckline extension of the small April to May 2025 head and shoulders continuation pattern, currently 133.24. Then moved down through the bright green neckline, currently at 132.92, of the August to October 2025 head and shoulders top, and the nearby March 22 high at 132.98, as well as the combination of the August 24 high and the lesser Fibonacci line at 132.65, before halting and finishing just ahead of another lesser Fibonacci line at 132.46. Further below is the bright pink neckline extension, currently 23 that is, of the August to October 25 head and shoulders top. This move lower puts prices back within the old and broken early February to mid-March bear channel. It's currently 130.64 to 133.07. How good this old broken bear channel will be, well, I am not too sure. In the even bigger picture, prices maintain their stance within the previously broken and now repaired very shallow dark blue bear channel dating between early July and early August last year to date, and that's currently 129.53 to 135.80. So far today, a higher open with a push up towards the overhead bright green neckline, but halting just short of it and moving once again lower, this time testing the bright pink neckline below. US dollar against the Japanese yen. A fourth bullish white soldier on Friday and a new high not seen since July 2024. The market was held within a wide congestion made up from the May 1990 high at 159.61, which was the market's base, then congestion at 160.05, and finally the April 1990 high at 160.34 where the market closed. Overhead, we have a fairly clear area apart from two significant pieces of resistance until the July 24 high at 162 even, though I do note we have quite a few legacy gaps in the market between the April 1990 high at 160.34 and the December 1986 high at 163.36. Most of these occur now during December 1986 and now between the July high at 162 even and the December 86 high at 163.36. Okay, so looking at this year's action, we still have a mid-January to mid-March double bottom pattern for primary target X up in the 161.49 area and a harder to reach secondary target X1 up in the 163.19 area. Additionally, we have up there the bright red middle line, currently at 161.29, of the mid-September 25 to late January 26 bullish Andrews pitchfork. This overhead bright red middle tine is the first of two pieces of overhead resistance I previously mentioned. In a bigger picture, prices are still within the September and November 2025 to date bright green bull channel. It's currently 154.29 to 161.50. Now, the bright green upper bull channel line is the second piece of resistance. Now, so far today, a lower open, though still within the 149.61 to 160.34 congestion, with a spike higher to make a new recent high, but then turning lower to test the May 1990 low below. US dollar against the CNH, the offshore Chinese yuan. An indecisive doji cross on Friday after the previous session's third bullish white soldier. The market has established itself within the newly drawn dark blue mid-January to early March mildly bearish shift pitchfork, testing the dark blue upper time currently at 692.19 and based on the slowly declining green short medium moving average currently 691.16. Further above, we have the bright red extension to the upper trend line of the May to August 2022 ascending triangle pattern, which is currently at 693.69, which had acted along with the green short medium moving average as a cap on the market back in early March. Now, meanwhile, below we have the May 2023 low at 689.53, which has not been that great a support or resistance for that matter, and the 50% Fibonacci line, the February 22 to April 25 move at 686.60, which has been a better support to the market, along with another congestion at 685.58. So far today, a widening of the range over the dark blue upper tine and below the green short medium moving average, but the market seemingly not comfortable with either and back within last Friday's range, if a little lower. US dollar against the Brazilian real. A bullish engulfing pattern on Friday, if only just, after the previous session's second consecutive indecisive doji cross. Anyway, it's more of a spinning top, but I'm going to call it a doji cross. Prices finished right on the combination of the slowly descending green short medium moving average, currently at 523.86, and the lesser Fibonacci line at 524.07. Overhead, we have another lesser Fibonacci line, and that's the 38.2% Fibonacci line of the October 18 to December 24 move at 527, but one which helped hold up prices in autumn last year. So that is, I suppose, significant. And then nothing until the declining mauve medium moving average, currently at 531.70. Meanwhile, below, we have nothing till the dark blue middle tine, which is currently at 514.86 of the major pattern here, the important dark blue mid-December 24 to mid-April 25 bearish shift pitchfork. This long-running dark blue bearish shift pitchfork is still the very excellent showrunner here for this market. Just underneath the dark blue middle of time, we have the really interesting combination of the 50% Fibonacci line of the October 19 to December 24 move at 513.82 and the bright red and quite old October 2018 to date uptrend. Well, it's not been changed, put it that way. It's unreconstructed, shall we say. And that's currently at 514.66. These two were very instrumental in slowing the decline of the market in late January and early February, and holding up prices in late February and early March. So the overall continuing question here from all the recent action is whether, over the last 3 weeks, whether we have either a double bottom or a double stroke triple top. Question is still open. US dollar against the Mexican peso. A third bullish white soldier on Friday and a new high for 2026 so far. Prices pushed up through the top, which is currently at 1807.48, of the recent tripled up bear channel, but stopped short of testing the combination of the lesser Fibonacci line at 1817.60 and the important slowly declining gold long moving average, currently 1817.19. This is the first time the gold long moving average has even come close to being challenged since April last year. All the recent action has set up the opportunity for the March action to be considered a possible ascending wedge pattern. That's currently 17.8541 to 18.1630. Something I've highlighted in bright red on my daily chart. Now this is in addition to a pattern I've repeatedly pointed out, a small but significant whole mid-January to end of February double bottom, Adam and Eve type. The primary target has already been achieved, and last week the market reached the secondary, harder to reach target X1 in the 1805.95 area. So far today, a little lower opening, but a move back up, challenging once again the long moving average. And beyond this, we have little until the February 2020 lower, 1851.71, but prices have pulled back down to that tripled up, broken upper bear channel line.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.